What's going on, everybody? It's your boy C-Zar, and in this video we will be talking about the Bitcoin halving and the significance that the Bitcoin halving has. This way, as crypto investors, we can all be a little bit more logical, prepared, knowledgeable on the circumstances that the future has for all of us. Because a lot of people, it's come to my attention over the past couple of years, really, that a lot of people think the halving is insignificant, that it has no significance now. We never had a 4-year cycle. The halving never mattered. It was always based off the business cycle. And maybe that's true to a certain degree. Maybe the business cycle, and not maybe, probably, the business cycle and stock market cycles have a huge impact on crypto and Bitcoin as a whole. I can accept that. But I don't accept that the halving has no effect on Bitcoin's price and therefore the crypto markets as well. Because the halving, even with the current supply, let me look at this real quick. Hold on, let's see. Put on the little C-Zar face here. The current supply of Bitcoin is, come on now, is 19.95 million Bitcoins. There will only ever be 21 million Bitcoins, okay? 21 million Bitcoins, 19.9. There's about 20 million out right now. There's only 1 million left to be had. So the thought for the average person is, oh, well, the halving just don't matter anyways now because the inflation rate is going to be reduced by such an insignificant degree that it's not going to have an impact on the markets. And that's a fair assumption to make, but it's very one-sided because there's two sides to this. One side is that there is a dilution of the supply, which does devalue Bitcoin. That dilution getting cut in half every 4 years, that's a big deal. So that typically we see some bullish price action as a result of the halving because of supply and demand. Now that we have 20 million Bitcoins out there and there's only 1 million left to be mined, it's not going to have as much of an impact on the supply. So therefore it won't have as much of an impact on price. That's an accurate thought. That's a logical thought, but it's one-sided. The other side to this is that every single day, the price, the amount of Bitcoin that's being mined is consistent until that 4-year period is over, and then it's cut in half. So you go from the people who are mining Bitcoin, who are profiting on Bitcoin, mining it every single day, keeping the lights on, as it were, to the blockchain. They're making profits, right? They got a quota they have to answer to. A lot of these companies, these big miners, are publicly traded companies, or if not publicly traded, they're huge companies that they have needs that they need to meet, right? Ends meet that they need to end. I don't know why I can't say that properly. They have needs that they need to meet. Requirements, financial obligations they have to fulfill. Their pay gets cut in half, not by US dollars, but by Bitcoin every 4 years. Regardless if there's 20 million coins or 20.9 million coins, the amount of profit that they're making, the people who are keeping the lights on, that are running the blockchain, and it's not just one group, it's all the people all around the world who are mining Bitcoin, their pay goes down significantly, 50% in Bitcoin every 4 years. If the price doesn't increase for in the US dollar aspect because of that, in turn, it effectively will become not profitable, and even it will cost you money to mine Bitcoins if the price doesn't increase, right? Imagine the price of Bitcoin never increased, but everybody wants to mine Bitcoin. We have the same amount of hashing power that we have now, but the price hasn't increased since 2017. The cost of Bitcoin mining goes up, but the cost of Bitcoin stays the same. Miners would literally be spending money to mine Bitcoin. You know what I mean? So that same thought, carry it into the future. If the price of Bitcoin doesn't keep up with the rate of Bitcoins that are rewarded to the miners, if the cost of Bitcoin doesn't keep up with that, mining will be insolvent. It will be impractical. It would be improper to mine, right? And every year, every day, the hash power of Bitcoin, the total difficulty of the algorithm that it is to mine Bitcoin, that we use to mine Bitcoin, the difficulty goes up. Therefore, the cost goes up. Therefore, mathematically, systemically, it's built in Bitcoin's code that the halving matters. It will always matter. I don't know if all of that was just a bunch of words or if I'm connecting dots for people, but let's go through here, right? I'm just asking Google a simple question. Let's see. Does mining difficulty increase as time goes on, right? I knew this from the very beginning, but just in case anybody had any disagreements, yes. For a popular and growing network like Bitcoin, mining difficulty generally increases over time. Generally, yeah, because as more and more people, as more computers come online, as more miners come online, there isn't more reward to be given out. They're not going to give more Bitcoins out now. That the network doesn't give out more Bitcoins because there's more miners. No, because there's more miners, the network increases the difficulty so that the reward goes to the people who are doing the most work, right? Generally, right? And it doesn't have to be like that. There are people who have single miners, solo miners, who can mine an entire Bitcoin. It can happen, but that's statistically improbable, right? It's statistically less likely to happen. It's kind of like winning the lottery, but it does happen. Difficulty adjustment, yes, it's a self-regulating. And the reason why, think about it this way, the difficulty will always go up. And the difficulty is the first thing that we're talking about here, because difficulty directly goes hand in hand with the cost to produce a Bitcoin. So if the difficulty is going up, why does it go up? Well, for one, again, let's say you and me, we decide, hey, I want to start mining Bitcoin. You know what? Screw investing. I'm going to take all my money and invest in miners, and I'm just going to mine Bitcoin. Screw investing. I'll just make Bitcoin that way. I don't even have to worry about it. I'll just mine Bitcoin. Well, there's people like that every day, every year, who are starting their own operations for mining. That will directly contribute to the increase of the difficulty. Second to that, there are people who are already mining and people who want to mine who are like, I want to be really good at this. I want to be one of the top miners in the industry. I want to be really good at this. So I'm going to have the state-of-the-art equipment. I'm going to have the fastest computational capabilities that any of these miners have. And therefore, every year, not only are we adding miners, but we're also increasing the rate at which these miners are able to mine and solve these algorithms. Their hashing rates go up, they increase. And because of that, even without any increase in new miners by population, we'll have increase in mining capacity by the hashing rate, and that will increase the difficulty in itself. So difficulty will increase. It's not a guarantee. Nothing is. It's not a guarantee that the sun comes up tomorrow, but it's going to come up tomorrow. The difficulty is going to increase. It's a statistical probability that you can bank on, genuinely. As time goes on, it's going to increase. Therefore, the cost of Bitcoins to mine will increase as well. If Bitcoin is to remain solvent, the price of Bitcoin must always be above the cost of mining. And I say always, maybe not always. Right now, because Bitcoin's at an $88,000 price, $89,000 price, there are a bunch of miners in the world that mine Bitcoin right now that are insolvent, that cannot profit from mining Bitcoin. It costs them more to actually mine a Bitcoin than it does to produce, depending on where you live in the world, depending on what kind of technology you're using, all that kind of stuff. Most miners, most of the top miners, they are profitable. But just imagine here, let's expand upon this thought, because if you're watching this, you're like, okay, we're going in circles now, C-Zar. I get the point. I get the point. Bitcoin's price, the halving will matter because every 4 years that we cut the reward in half, miners get paid less, right? Miners get paid less. But the difficulty goes up, therefore the cost to produce a Bitcoin will cost more, right? That's the bread. That's the bread and butter. Now let's get to the meat. Okay? If it costs more to produce a Bitcoin as time goes on, but the reward of Bitcoin payment that the miners receive gets cut in half every 4 years, that's always going to have an impact. Because now, instead of making, let's just see, what is it right now? What's the average miner make right now? What is it? It's instead of making 3.125 Bitcoins, at the next halving, they'll be making 1.56 Bitcoins. Now, imagine that the cost of mining stays the same. Whether it's $88,000 to mine a Bitcoin, whether it's $40,000 to mine a Bitcoin right now, whether it's $100,000, however much it is to mine a Bitcoin, in not 4 years, in like 2 years and a quarter, you are going to be making less profits. You're going to be making half as much profits. If you're able to sell a Bitcoin right now for $88,000, but it costs you $44,000 to produce that Bitcoin, cool. You're selling for twice as much as it costs you to produce. That's great. But after the next halving, now you're selling at the exact cost to produce, right? But that won't happen because as time goes on, the cost to produce will go up. And the amount of rewards you get will go down. Therefore, Bitcoin's price has to increase. It has to. It's not a question. Either that or people have to stop mining it and bring the difficulty down. Either, but that's not going to happen because there's too much competition. People want Bitcoin. Nation states want Bitcoin. In private investment funds, hedge funds, wealthy investors around the world, the people who control things and make things go round, right? The money supply people, they want Bitcoin. There's not going to be less competition. There'll only be more competition, and for less of it. The price will have to go up. So we've established this, and again, I keep hitting this over the head because I'm really, the main point I'm trying to drive home is that the halving will always have an impact. I get on X.com, I get on YouTube, I see people talking about how the halving doesn't matter anymore. There's already 20 million Bitcoins out there. There's only 1 million left. It doesn't matter. It's irrelevant. That's so dumb. It's that in itself, by itself, is not dumb, but it's dumb because you're looking at a specific part of a whole picture and you're missing the whole picture. The whole picture is that the amount of Bitcoins being produced every single day gets cut in half by 50%. Supply and demand. That's fundamentals of economics. Of course, the halving will always have an effect on Bitcoin's price. It always will. Anybody who says that it won't have an effect on Bitcoin price, they're looking at it one-sided. They might not be dumb, but they're not thinking about it thoroughly. They're taking the easy way out and thinking, oh, the supply is already at 20 million. Who cares? Who cares? No, it will always matter. And it's not that it will always matter to a lesser and lesser degree. In the sense of total supply diluting the circulating supply, yes, okay, that degree will diminish. But the degree of significance for the halving will always be the same. Now that that's gone, now that the circulating versus the remaining supply, the dilutable supply, now that is virtually irrelevant to most people's opinions, the only thing that's left is the cost to produce Bitcoin and the reward of Bitcoin going down over time and going up over time. The cost will always go up over time to produce a Bitcoin. Every day, every week, every year, it'll go up with variances here and there. Miners shutting off, going offline, more miners coming online at various times. It'll increase and decrease with time, right? Power outages in like certain areas. I don't know if there's a big mining operation in Puerto Rico, they get hit with the hurricane, we might see the hashing rate drop, right? The difficulty might drop, but more or less the difficulty, the cost to produce a Bitcoin will inevitably go up. It's on a path higher as time goes on. The rewards that you get for mining that Bitcoin goes down as time goes on. And the reason why it goes down is because of the halving. It gets cut in half every 4 years. That's going to directly have an impact on Bitcoin. If the price doesn't go up, if that doesn't incentivize miners and other people to sell Bitcoin at a more expensive level because it costs more to produce, that's just improper. That's bad business. How much, and I looked this up, this is not the best representation, I didn't do a whole lot of research on this, but how much does it cost to produce 1 ounce of gold? In Q2 of 2024, it cost $1,400 to produce 1 ounce of gold. Well, in Q2 of 2024, that's back over here, gold was about $2,300 to $2,400. $2,300 to $2,400. They weren't even selling gold at twice the cost that it cost them to produce, but they're selling it at more of a cost, right? They sell it for more than it costs to produce gold, right? If you're mining gold, you're not going to sell it for less, you're going to sell it for more. Same thing with these miners, right? As time goes on, the lesser and lesser that the reward is for these miners aren't going away. So what are they going to do? They're going to sell their Bitcoin for a higher and higher price because it costs them more. It doesn't matter if it costs them $100,000 or $500,000 to produce 1 Bitcoin and they only make $40,000 profit off of it. That's still profit. That's still profit that they can make maybe daily, maybe several times a day. Who knows, right? That's my whole point. That disparity, and that's another thing too, actually, another thought that I'm trying to invite is that as time goes on, we will willingly mine Bitcoin for a dramatic cost and sell it for just a margin of what that cost is. Like if Bitcoin costs $1 million to produce, we'll be selling it for $1,100,000. You know what I mean? It's not a $1 million cost to produce Bitcoin will not directly reflect in a $2 million price. Does that make sense? Because at some point, doubling the cost to produce is not going to be worth it. Some people are willing, if they have effective mining operations, will be willing to take profits at lower levels, right? They don't need to double it. Just like gold here, it's at that time, they didn't sell it for 100% profits. They sold it for what was worth their time, right? To pay for their employees, to pay for their equipment, to pay for their food, whatever, all that stuff. But I'm kind of getting off track. Again, the main thought, and I hope that I've opened some eyes here, is that as time goes on, the reward for Bitcoin will go down. And I wanted to do it in a way, but it's not concrete. I wanted to make this video in a way where we could literally calculate what the price of Bitcoin will be because of what the reward is, what it has to be. But that's not so easy to do. Because again, right now, if it costs $40,000 to produce a Bitcoin, okay, maybe you have the luxury of selling it at $80,000. You have that 100% markup in your what you're selling for your cost to produce it. But whenever Bitcoin's worth $1 million, you know, just imagine here. What I'm trying to say is, imagine here you're making $40,000 off of a Bitcoin. Okay, it costs you. Let's say it costs you 44K. Maybe it costs you 50K. It's probably more than that. But let's just say it costs you. For all intents and purposes, let's cut it in half. Let's say it costs you $44,000 to produce one Bitcoin, and you're selling it for $89,000. That's good profit. That's great. Now imagine Bitcoin is worth $1 million, and it costs you $1 million. It costs you $960,000 to produce. You're making $40,000 still off of that Bitcoin, the same that you'd be making here, right? Does that make sense? So in other words, this itself doesn't directly tie into a specific price, but it does tie into a demand, a price demand requirement that this has to be. In other words, as time goes on, as the halving rewards get lower and lower, as the block rewards get lower after each halving, mathematically the price has to go up. This is why the halving will always matter. It will always matter. There will always be some type of cyclicality, some type of reminiscent price action of what we've seen historically with Bitcoin for every halving that we have in the future. I don't really have anything else that I want to say. I do, just for fun, I want to try this. I don't know how successful this will be. I will end the video if it goes bad, and I will just post it anyways. I'm not going to edit it. I don't care. But I want to see if we can come up with something rational as far as the price goes here, right? The average miner right now is receiving 3.125 Bitcoins. Okay, sorry, not the average miner. That's the block reward, okay? That's the block reward. Let's assume, and what is the average cost? I actually asked Grok here. Let's see. The average cost, and then I said from the top 10 mining operations in the world, the figure, he's saying that it costs approximately $117,000. I don't believe that. Some, like Iris Energy, have lower costs at $88,000. See, Bitcoin's at $88,000 now. Bitcoin's basically at the cost to mine a Bitcoin right now, right? When I was saying 44K, that was just a number to make it easy to understand that, okay, we're doubling, but generally it probably costs more than that. And I don't think it quite costs 88K. I'm sure that the average miner is not spending 117. I'm sure there are miners who are largely profitable in comparison to this, but just to show it can be expensive. And depending on where you are in the world, energy costs matter. Energy costs definitely matter, depending on how much hash power you have too. Let's imagine that this is accurate. Okay, let's just run with this. Let's say it costs 88K to mine a Bitcoin right now. Well, Bitcoin's at that price. It's going to have a hard time going below that price because miners need to make money too, right? 88K, let's say it costs 88K to mine a Bitcoin. As time goes on, it will only cost more to mine each Bitcoin because your rewards will only diminish, okay? They'll only get cut in half. So if it costs 88K to mine one Bitcoin when the rewards are 3.125 per block, if we cut that in half, I think it's no stretch of the imagination then that the cost of Bitcoin would likely double per Bitcoin that you produce, right? It would likely double. If it costs 88K to produce, then we go from 88K to 160K. 190 or 170K. If it costs 170K to produce one Bitcoin at this halving rate, at this block reward rate, 170K to produce one Bitcoin, the price should be higher than that. We cut that in half, theoretically then, the price of Bitcoin should go up, maybe not quite double, because again, it doesn't have to equate that way. See, this is hard. This is hard. Because if you cut the block reward in half, that doesn't necessarily mean that Bitcoin has to double in price, because again, miners aren't always going to sell Bitcoin at a 2-to-1 ratio of what it costs to mine. It's difficult to say. This is where I ran into difficulties with the math. I'm sure there's a way to do it where you could feasibly come up with, when there's this much Bitcoin being produced per block reward, the price of Bitcoin should be this. I'm sure there's a way to do that. I'm just not going to take the time to do it here, and I'm having a hard time doing it. So I'm going to end the video there. It's kind of exactly what I thought the ending would be like, is a fail. But we tried. We tried anyways. Because again, I hope you see where the failing's going. We could cut this in half and then double the price of Bitcoin all the way to Timbuktu, but it's not going to be like that. It's not quite that simple. It's not quite that simple. It could be, maybe it is, and in which case, we cut this in half. Cost to produce a Bitcoin here would be 300,000. Cost to produce it here would be 600,000. Cost to produce it here would be 1.2 million. Therefore, Bitcoin should be worth more than 1.2 million by 2040. But it's not that simple. It could be worth 1.2 million by 2028, by 2032. It could take until 2048. It's not that simple. So I'm just going to end the video there. I hope you guys took something away from this, and maybe next time you hear somebody say, the halving doesn't matter, you will be more informed. You'll be properly educated, hopefully, if you can decipher my ramblings. I think it was pretty easy to understand that the profitability of the miners directly impacts the price of Bitcoin. The people doing the work, mining the Bitcoins, they need to sell it for a profit so that they keep the lights on. Their gift, their reward, their prize is cut in half every 4 years. Beyond that, the supply of Bitcoin being cut in half, imagine we mined 90% of the gold on the planet. There's only 10% left to mine. But we're mining at a certain amount every day. We're mining 10 ounces a day. All of a sudden now, there's only 10% left of the gold reserves on the planet. We know this. Well, most of it's already mined. But now the 10 ounces a day that are being mined gets cut in half to 5 ounces a day. Gold's price would go up because it's that much more difficult to acquire. Does that make sense? Even if there's already some that's acquired, it's that much more difficult to produce new stuff. And then beyond that fact alone, just the mathematical consistency that the price of Bitcoin to produce will go up over time, and the reward will go down over time means that the price has to go higher too. But I've got nothing else. I'm repeating myself. I got nothing else. Hit the like button, subscribe. Take care of yourselves. Thank you all. Bye-bye.